we can also forecast it out. And it gives us a peak in global liquidity in September 2024. So this year, we'll see a peak. Don't worry, a peak is not a peak of markets. This is a year-over-year rate of change. We don't end up getting to negative liquidity until December 2025. So this is why I think this cycle runs between now, and it started in 2022, sometime in 2025, somewhere probably towards the latter end. Normally, the crypto markets end in December. Maybe it comes a bit sooner. We'll have to be on alert for that. But basically, this is how we see liquidity playing out. Again, don't expect perfection. I'm not expecting to be perfect, but it'll give you a pretty decent idea. You don't need a massive liquidity cycle either. You don't need 2020 to drive these things up. You just need liquidity to be positive and stay positive for markets to work their magic.
We are in an extremely important and exciting period in the ongoing cryptocurrency bull market. Many believe this is a make or break period for crypto asset prices that could determine how the bull market continues. Recent price moves, especially Bitcoin's drop to $67,000, have been attributed to market manipulation and price suppression. Big Wall Street heavyweights like BlackRock are notorious for criticizing investment giants' interest in Bitcoin, yet this is exactly what they expected. Real Vision founder and CEO Raoul Pal forecasts a structural rise in cryptocurrency prices in 2024 and well into 2025, saying everything else is noise. Tens of billions of dollars have been poured in through the ETFs, but Bitcoin has been trading in the same range for weeks. In his piece, he insists that one critical and often neglected factor will shift the game. Global liquidity will surge as central banks issue more money to prevent their economies from collapsing. Pal believes the global economy hit a turning point in 2008 that should have been catastrophic, but central banks saved it, creating a liquidity cycle that progresses through the 4 stages of expansion. Central bank balance sheets drove peak and trough. Pal says a new liquidity cycle has begun as we move from expansion to peak liquid conditions around September 2024. Crypto asset prices will pick up sharply and continue to perform well into 2025. We will bring you clips from Pal's Liquidity and Crypto Bull Market Masterclass discussing changing liquidity conditions, cryptocurrency prices, and the banana zone. Please like, and subscribe to the channel and set on post notifications for more videos like this. Thanks.
We also know that we can construct at Global Macro Investor a lead for liquidity. It exactly caught the low in Q4 2022. That's when we kind of doubled down and went super long technology and crypto, because that was the bottom. That's when everybody else was getting max bearish. We got max bullish using liquidity. The only other person who really uses it in the same way is Mike Howell, and he does some great work as well. But we've really gone down the macro crypto. We have more macro crypto understanding of Global Macro Investor than certainly anybody else in the world, and how this all links together. And I won't show all of it now, but I'll show you some. So that was the low that we chose in Q4 2022, all cataloged in GMI, all cataloged in Real Vision Pro Macro. You know, we do everything out in the open. So this is not us saying, oh yeah, we bought it, wink, wink. No, we did. It's all cataloged. Anybody who's subscribed to those services know well what we did. And since then, it's been 304%. Now, what's interesting is the Everything Code helps us understand how to forecast liquidity into the future. Again, we're not expecting perfection, but you're expecting the cycles to play out. So here's the ISM with a 15-month lead and the global liquidity. Why the ISM leads is because it's actually inverted there. It's because the business cycle keeps repeating because of the debt refi cycle I've talked so much about. So what we are is, it confirms some of the other charts I showed you before. We should start to see global liquidity pick up going into election years. That is very typical. You know, we've got the commercial real estate to deal with. We've got how the hell are they going to keep issuing bonds to pay the interest when bond yields aren't coming down? Something's got to give, and liquidity is going to give it to them. So we know it's coming. We just don't know how. It could be in a new mechanism, which is the Basel IV agreement, which forces banks to hold more treasuries. There can be a number of ways we do this. We will also maybe see a massive release of the Treasury General Account over the election period. That's possible too. We don't know where it's going to come from. it's unlikely to come from straight quantitative easing because everybody knows what that is now. So they'll find ways of obscuring what they're doing, which is making you poorer. They're basically taxing you every year by about 8% by devaluing, debasing the currency. In fact, the Fed have actually been debasing faster than others at some 15% a year if you just use the balance sheet. But anyway, let's use that global number. We're also starting to get the rate cutting cycle coming in. Now, rate cutting doesn't actually go into the liquidity, but it's part of the things that show you that the central banks want to move towards liquidity. We've just started the cutting cycle. Started in Latin America with Brazil. We're starting to see it across Europe. We're starting to see it elsewhere. And the next 2 years will be the feature of cutting rates. Sure, maybe rates don't go as low as they were before. Maybe there's only a few rate cuts. If you remember, or many of you won't, but 1994 was the bond market blow up. The Fed raised rates a lot. Everybody blew up. Banks went under. Very similar to 2022. 1995, everybody expected the Fed to cut rates several times. They actually only cut them twice, 75 basis points in 2 goes, and then went on hold for years, essentially. Now, most pundits in the market say, well, if they don't cut rates as much as the market was expecting, it's going to be terrible. Answer was, back then, the stock market rose 150% before super accelerating on a rate cut in 1998, and we got the NASDAQ bubble at the end of that.
He's also excited about the banana zone, a term he made up to describe the point where prices for cryptocurrencies just keep going up. Go bananas, according to Pal, this much-awaited moment promises limitless opportunities for investors who are patient enough to ignore the noise and avoid things like leverage that could make them miss the opportunity before it's even begun, though Pal has not given a specific timeline for the banana zone. He expects it to begin sometime between June and August 2024 and last until June to December 2025. During this period, the renowned macro analyst and former Goldman Sachs executive expects a rapid rise in crypto asset prices and adoption, taking the overall crypto market cap from around $2.5 trillion today to at least $10 trillion next year. This means individual crypto assets will go 3x from current prices, taking Bitcoin from its current $68,000 price to around $270,000 per coin. Pal expects Bitcoin's prices to hit $200. 000 in the worst-case scenario. Pal is even more bullish on Ethereum, which he says will outperform Bitcoin, and Solana, which he expects to outperform both leading cryptocurrencies. Let's see the show once more.
Liquidity a bit further using the everything code. So we saw that chart before. This is ISM going forwards. Last time I showed you the ISM versus liquidity, but here's ISM going forwards, which says the business cycle is going to rise. This is why currently cyclical stocks, commodities are rising, because the ISM is starting to pick up. But we can also forecast it out. And it gives us a peak in global liquidity in September 2024. So this year we'll see a peak. Don't worry, a peak is not a peak of markets. This is a year-over-year rate of change. We don't end up getting to negative liquidity until December 2025. So this is why I think this cycle runs between now, and it started in 2022, sometime in 2025, somewhere probably towards the latter end. Normally, the crypto markets end in December, maybe it comes a bit sooner. We'll have to be on alert for that. But basically, this is how we see liquidity playing out. Again, don't expect perfection. I'm not expecting to be perfect, but it'll give you a pretty decent idea. You don't need a massive liquidity cycle either. You don't need 2020 to drive these things up. You just need liquidity to be positive and stay positive for markets to work their magic. Now, those forecasts, if I use the log channel of global liquidity, using the everything code forecast doesn't look unreasonable. Doesn't look unreasonable at all. Now, it might not get to 2 standard deviations. Maybe it's 1 standard deviation like it got to in 2017. Remember the crypto market then? That was la la land. 2013, 1 standard deviation, a complete wild crypto market. So again, you don't need the massive liquidity, you just need liquidity. And so that's where we think it might go. Let's see how it plays out. That corresponds with the log channel in Bitcoin, obviously. And that would give us something like a forecast of around 270,000 by the end of this year. Again, please don't hang on to my forecast. Say, Raoul Pal forecast 270,000 this year. That's not what I'm trying to do here. What I'm trying to do is contextualize stuff for you and say, listen, between now and the end of the year, it's going up a decent amount. Is it 150,000? Is it 250,000? Is something in the middle? I don't know, and I don't really care. And nor should you. People get too hung up on forecasts when this asset is just going up over time. Anyway, it means this year will be a very strong year. And we can plug in some forecasts. And I don't like giving these out to people because people, again, will take this out of perspective. They'll say, Raoul Pal forecast $400,000 Bitcoin headline. That's bullshit. What I'm saying is, using our model, we see significant continued upside into 2025, where then liquidity starts falling. And so sometime around the second half of the year, we will see a topping pattern in Bitcoin and therefore crypto. And it suggests that it should be strong. Even if you halve my targets, halve the analysis that comes out of the model, that's still a great year. That's my point. Please do not tell me that I'm forecasting $400,000 Bitcoin. I'm not going to take that because people deal with it irresponsibly, and that's not the right thing. I'm just saying it's going up a lot.
Wiley Wu, a well-known on-chain analyst, says that Bitcoin is currently going through a small capitulation phase because of the April Hing event. Wu says that we could see more liquidations, which would drop Bitcoin's prices even more before they reach new all-time highs. Wu wrote on Twitter that Bitcoin is going through a rare miner capitulation. He said that this is because of the halving event, which kills weak miners. As they die, they dump Bitcoin, and the price goes back up afterward. But first, we need to get rid of the decedent open interest in futures bets. Liquidations need to happen before a pump. When asked how the paper markets play a part in all of this, Wu said that the paper in the system got purged after FTX BTC recovered, but since April 2020, there has been a buildup of paper despite spot ETFs being scooped, and we need to get rid of that to make the system structurally healthy for new all-time highs. One is about the macro, and the other is about using info on the chain. It looks like both Pal and Wu agree on one thing: Bitcoin and other crypto assets will make a big comeback soon, and the market for all cryptocurrencies will reach new all-time highs. Do you agree with their predictions and analyses? Please share your thoughts and comments in the part below. Also, make sure you like this video, subscribe to the channel, and turn on post notifications to see more videos like this.